Good afternoon, everyone. Uh, I welcome you all in our tax revisionary class for chapter number 7 of Advanced Tax, TDS and TCS provision. So a very warm good afternoon, namaskar, sat sri akal. Let's get started with our today's class. In today's class, we have to cover 3 topics of the same chapter. These topics are the types of collection of taxes. Like generally, income tax need to be paid in the assessment year. Whatever income you earn in previous year, we need to pay tax in assessment year. But there are certain cases, there are certain transactions, there are certain payments, there are certain conditions. If you fulfill those conditions, if you fall under those transactions, if you fulfill that certain condition, in that cases, you have to pay your certain amount of tax in the nature of maybe TDS, in the nature of advanced tax, in the nature of TCS in the same previous year. So these are technically the types of collection of taxes. After paying of TDS, advanced tax or TCS, the remaining amount need to be paid as self-assessment tax at the time of filing of return of income. So these topics, what we are going to cover today in our class is advanced tax, which is based on your estimated income. So if the estimated tax liability on your income is more than or equal to 10,000, then you have to follow the provisions of advanced tax. There are certain exceptions also for senior citizen, etc., that you must have been gone through in the normal classes, in which that must have been discussed in detail. Then we have TDS. TDS is applicable on certain types of payments. There are, of course, certain multiple conditions in each kind of payments, whether it's payment of interest on security, payment of dividend, payment to a contractor, professional fees, etc. So there are certain number of payments. So if there are a specified payer, a specified pay, and a specified limit has been exceeded, then those cases a certain amount tax need to be deposited by the payer from that income of payee, and the payee can claim the tax benefit at the time of filing of return of income. So there are certain payments, and on fulfilling certain condition, the payer needs to deduct a certain payment from the income of payee, and that the payer needs to deposit to the department on the PAN number of the payee. So that is a process of basic concept of TDS. Now TCS is tax collection and so these are certain specific transactions. There are certain specific tenders in respect of goods, in respect of services. Then there are certain more transactions like purchase of a motor vehicle exceeding specified value. Then we have also covered certain kind of seller, if they are receiving a certain amount of money, like more than 50 lakh rupees transaction in a previous year, they needs to charge that TCS also. So we have multiple provision of TCS, TDS and advanced tax, and these transaction will be discussed in today's class. We will also going to solve certain MCQ. We have a huge number of MCQ in today's class, almost 34, 35 MCQ we need to solve. There are, of course, past year question papers, MTP questions also related with these topics. So let's get started. Before the starting of the class, these are the topics what we are going to cover in today's class. TDS, the basis of TDS is certain payments on fulfilling certain conditions. Those conditions regarding who should be the payer, who should be the payee, what kind of amount, how much amount, the limit, and other condition in each sections. Almost 25 or 26 provisions we are going to discuss in TDS concept. Okay. Then we have advanced tax liability, which will be applicable if your estimated tax of previous year is equal to or exceeding 10,000. Then we have certain dates on which a certain percentage of your estimated tax liability need to be deposited. And if we are not going to do that, then we have interest under section 234B or interest under section 234C could be applicable. Then we have TCS, tax collection at source or tax collected at source, and these are on certain transactions of like some tenders of toll plaza, etc. There are certain goods like tendu leaves, mining projects, etc. Then we have certain transaction exceeding 10 lakh rupees of motor vehicle value. There are certain payment if received by seller from a certain buyer more than 50 lakh rupees in a year, etc., etc. We have certain amendments also, which those also we are going to cover in today's class regarding the TDS concept. Okay, so these we need to cover. I believe that you must have gone through with the normal classes in which the other faculty must have discussed all the provisions, and I have technically gone through with all topics, and I have find those certain provision that must be, or in my opinion, more important for your examination purpose and need to be revised also. Like there are certain question that advance tax liability on estimated tax, is it exceeding 10,000 or it's equal to or more than 10,000? So the correct answer is it's equal to and more than 10,000. So if your estimated tax liability is exactly 10,000, then of course you have to follow the advanced tax provisions also. So we have a lot of MCQs, RTP question, MTP question, preceding examination questions. And if we have left with the time, we will also discuss test your knowledge questions also. Fine. So let me discuss one by one in a summary way those sections, or if there is certain important part in a section. So those type of important topics or a full section that we are going to discuss in today's class, and definitely that is going to be a value addition in your knowledge, because examinations are of course coming. It's very near. In January you have to give your examination, and these things what I am going to discuss with you definitely going to add on in a value of your TDS chapter, advanced tax topic, and TCS provisions. So first we will discuss okay, Abhishek, good afternoon. Swati, good afternoon. Bhumika, good afternoon. And Om Krishnan Gupta, good afternoon to everyone again. So let's get started with the provisions. So you can see there are huge provisions we have. First, we will discuss the provision regarding on page number 7.6, section 192. 192 talks about the TDS on salary income. So if your income exceeding a certain limit, and if that income falls under the tax liability, so we have to calculate your estimated tax of the year, and whatever is the average rate of tax is there, TDS need to be deducted accordingly. So the provision says, the basic provisions are very simple. We are going to discuss the point number 2, which talks about average rate of income tax, means the rate arrived at by dividing the amount of income tax calculated on the total income by such total income. So in certain cases, we have to find out the average rate of tax in case of TDS of salary income, and how we can calculate that average rate of tax. The provision says total tax after including cess, etc., upon total income into 100. We will need this average rate for calculating taxability upon perquisite value. Now, point number 4 is important, and it says the concept of payment of tax on non-monetary perquisites has been provided in section 192 1A and 1B. So if there are non-monetary perquisite, and upon those perquisite, if employer wants to pay tax, then we can calculate that tax according to the average rate of tax. This section provides that the employer may pay this tax at his option. So the perquisite, those fall under section 192 1A and 1B. On the value of those perquisite, employer can pay tax in lieu of deduction of tax at source from salary payable to employees. So the amount of tax employer is going to pay will be deducted from your TDS liability because that liability has been borne by the employer. Such tax will have to be worked out at the average rate applicable to aggregate salary income. So that's why we have to find out the average rate of tax to calculate the tax liability upon these non-monetary perquisites. And payment of tax will have to be made every month along with tax deducted at source on monetary payment of salary, allowance, etc. So we have a question also. We will discuss all these questions in short because we have to cover a lot of provisions in a single lecture. The question says, suppose employer pay gross salary including allowances, monetary perquisite is 7,30,000. Beside these perquisites, other non-monetary perquisites are 1,20,000. The general manager exercising the option of shift out of the default tax regime and pay tax. Now, what is the tax implication in the hands of Mr. A, the employer, and the general manager, the employee? So the provision is very simple. You have to calculate tax as per normal case. Just calculate tax as in normal case. There is no special provision for TDS calculation of tax. We have to calculate tax normal case like 7,30,000 is my salary. Non-monetary is 120. Total gross salary is 850 and after deduction it's 8 lakh rupees. So my net salary or chargeable salary to tax is 8 lakh. So if I'm going to calculate tax on this 8 lakh rupees income, my normal tax liability would be 75,400 after including cess. Normal tax would be 72,500. Then 4% cess. So our tax liability would be 75,400. So if I need to calculate the average rate of tax, that would be 9.45425%. So in this case, if we need to find out what should be the amount of TDS, so that would be 75,400 divided by 12. So that would be my TDS per month. So now A can deduct 75,400 at source from the salary of the general manager at the time of payment. Alternatively, Mr. A can pay tax on non-monetary perquisites as under. That is, tax on non-monetary perquisite would be average rate of tax upon those perquisite values. It would be 11,310. So if this amount is employer is going to pay, then in that case, the balance TDS liability would be 64,090 rupees. So if Mr. A pays tax of 11,310, so Mr. A's employer on non-monetary perquisite, the same is not a deductible expenditure as per section 40A. So whatever amount has been paid by the employer as tax on non-monetary perquisite, so this amount of tax cannot be claimed by Mr. A in his profit and loss account as expenditure. This is a disallowed expenditure. So Mr. A cannot claim this expenditure as a deduction. And because he cannot claim this amount as a expenditure, so this amount would not going to be taxable in the hand of employee also as income. So if something cannot be treated as expenditure, that amount cannot be treated as income also or vice versa. So for this payment cannot be treated as an expenditure in the hands of employer. So vice versa, this payment cannot be treated as income in the hands of employee also. We have discussed these provision in PGBP chapter in detail also, this provision, and this concept we have already discussed in salary topic. And TDS is technically covering both topic because it is regarding TDS also. The concept is also connected with the TDS provision. The amount of tax paid towards non-monetary perquisite by the employer, however is not chargeable to tax in the hands of the employee. So that is a very important point for your examination. So please go through this example again. Please revise these provisions more focusedly and more frequently. So again, I am saying, if you are listening it like this, that sir is saying, you only need to revise this. That is not what I'm saying. I'm saying these are more important in my opinion. So you have to revise these provision because there's some special provision. Other concepts are general, that you have to calculate tax on your income and divide it by 12. So you would have the per month salary as a per month TDS need to be deducted out of your salary will be there. But if these are like non-monetary budget provisions are there, then you have to solve it like this. Yes, Abhishek Singh, you are correct. Whatever tax paid by employer on non-monetary perquisite of employee is exempted in the hands of employee as income, and it is not allowed as deduction in the hands of employer also. Okay, well done. Next topic what we are going to discuss is page number 7.11. Section 193. So section 193 deals with interest on security. General provisions are there. The rate of deduction is 10%. Time of deduction is payment or credit, whichever is earlier. Mostly in majority of cases, the provisions are exactly this, that at the time of payment or credit, whichever is earlier. Non-applicability, those cases in which this TDS concept will not be applicable. So no tax deduction in the following cases. First, second, third are normal cases. Point number 4 is very important for the purpose of examination. On any security of central government or state government, the limit is exceeding 10,000. So if this limit has been exceeded, only in that case, TDS need to be deducted at the rate of 10%. So the if limit is exceeded and the amount is 11,000, then TDS need to be deducted on full value of 11,000. On any debenture, this is also very important. I'm saying those point importance which have some different provisions has been or some specific condition has been involved. So those, in my opinion, are more important for the purpose of examination. More important, but everything is important. Okay. So on any debenture, whether listed or not listed on a recognized stock exchange, issued by the company in which the public are substantially interested. So those are those company in which public are substantially interested. What we generally call those company? What is the name we generally use for those companies in which public are substantially interested? I guess section 218 define those company, not public company. Public company is a word which is not in income tax. What is income tax generally used for the name of these type of company in the basic concept chapter? I guess these are section 218 companies in which public are substantial. No Bhumika, it's not limited company. No Pooja, it's not listed company. No Abhishek, it's not public company. No Miss Sejal, it's not listed company. There's a different word what we used under income tax for these kind of company, and I want to know that word. Not domestic companies, Swati. No, not domestic even. Anyone else? There's a name you must have heard, closely held company. So closely held are those company in which public are not substantially interested. Fine. And the company in which public are substantially interested, what we call that? Not substantial interest, called closely held company. So what is the name of companies in which public are substantially interested? What we call them? बता दो बच्चों, बता दो, एग्जाम आने वाले तुम लोगों के. Widely held company. Widely held company. You must have heard that. So we call them I guess section 218 is the definition of company in which public are substantially interested, and we generally call them widely held company. Okay. Okay. So this provision is applicable on only on those companies. So if these conditions have been fulfilled, that if interest on any debenture issued by the company in which the public are substantially interested and payment to a resident, individual or HUF. However, interest should be paid by account paid check, and the amount of such interest or the aggregate thereof paid or to be paid during financial year by the company to such resident, individual, HUF should not exceed 5,000. So TDS would be deducted if it is exceeding 5,000 rupees. And the rate is, of course, 10%. So for these, it's 5,000. For this is 10,000. Any other interest other than these, there is no threshold limit. Any limit would be chargeable to TDS. So this is very important, in my opinion. Next, we have interest other than interest on security under section 194A. We have amendment also in this case. We have 3 amendments regarding TDS provision. Amendment number 1 is for this case, and we will discuss that amendment. There's actually a new scheme has been inserted for non-deduction under section 194, Mahila Suraksha Samriddhi Yojana, something that we will discuss in our amendment provisions. So amendment number 1 is regarding under section 194A. 194 are generally normal provision. It says interest other than interest on security. So except interest on mutual funds, debenture, bonds, etc., any other interest will fall under this category, like interest on FDRs, interest on saving account, interest on loan, etc., will fall under section 194A provision. The concept is saying this section applies to only interest other than interest on security. It excludes individual and HUF. If individual HUF are payers, they need not to deduct TDS. But if the individual HUF are those payer, those turnover exceeding 1 crore, or if they are professional, their professional receipt exceeding 50 lakh in preceding previous year. Like we are discussing provision for previous year 23-24. So if any individual or HUF fulfill any of these conditions in previous year 22-23, then TDS provision would be applicable. So if you are an individual HUF, those turnover or receipt does not exceed 1 crore or 50 lakh in previous year 22-23, then this provision is not applicable. But if receipt or turnover exceeding 1 crore or 50 lakh in previous year 22-23, then you have to deduct TDS in previous year 23-24 transaction if you are a payer of interest other than interest on security. So this provisions is going to be discussed multiple times in TDS case. In most of cases, individuals HUF, those do not have turnover exceeding 1 CR or 50 lakh, as the case may be, are excluded to comply with the TDS deduction provision. Okay. So that is a provision you must have discussed in your detailed class also. Now the TDS need to be deducted at the end of the financial year or quarterly basis, depending upon the payer general practice. Bank generally deduct on quarterly basis, or it could be deducted at the end of the year also, or even on half yearly basis, depend upon the scheme cases. The rate of TDS is 10%. No reduction of TDS under section 194A. There are certain cases where there is no requirement to deduct TDS if the interest does not exceed 5,000. If the interest does not exceed 40,000, in case payer is banking company, corporate society, or post office. And if you are a senior citizen, if the payee is the senior citizen, then in this 40,000 would be replaced by 50,000 if you are a senior citizen. So if there's a payer is a bank, society, or post office, the limit is either 40,000 or 50,000. In other case, the limit is only 5,000. So if Mr. A takes loan from Mr. B and Mr. A pay interest of rupees 8,000, then that case will fall under point number A and TDS need to be deducted. The time limit and the provisions are general provision. The special provision in this category is generally societies are excluded as a payer. Interest income credited or paid in respect of deposit primarily agricultural credit society or these societies are excluded, but in certain condition are satisfied, then these societies have been included also. However, a cooperative society referred to in E and F is liable to deduct. So general provision says a cooperative society need not to deduct TDS. But if these conditions fulfill, then they also need to deduct TDS and need to comply with the provision of TDS. The conditions are the total sale, gross receipt or turnover of the society exceed 50 crore during the financial year immediately preceding the financial year in which interest is credited or paid. So we are discussing about the financial year 23-24 provision. So suppose there is a cooperative society paying interest, then this 50 crore condition need to be checked for financial year 22-23 turnover. Clear? And both conditions should be satisfied. The turnover should exceed 50 crore and the amount whatever they are paying to any payee should exceed 50,000 or 40,000. For senior citizen exceeding 50,000, other it's 40,000. Clear? If they are paying interest to their member, etc. So generally on those payment to the interest, payment of interest to member, etc. does not fall in the category of TDS deduction. But if these condition is fulfilled, if these conditions are fulfilled, then TDS need to be deducted. So for examination purpose, it is very important. Okay. Next is point number J. So TDS provisions are almost 104 pages in your study material. And I have gone through with all 104 pages and find out the special provision that could be more important for the purpose of your examination. So it took me a lot of time because when we teach in a normal class, so we teach each and everything. The full provisions of all sections because we have certain slot in which we need to cover those chapters. But in a revision class, it's very difficult to cover each and everything. So we have to cover only those provisions which are, in my opinion, is more important in comparison to other conditions because there are certain special provision has been included. Like point number J, we are discussing those cases in which section 194 does not applicable. So we discussed that in case of society, it's not applicable, but there is special provision that if turnover is more than 50 crore, then it could be applicable. Same in the case of over here, income paid by way of interest on the compensation amount awarded by motor accident claim tribunal, where the amount of such income or as the case may be, the aggregate of the amount of such income paid during the financial year does not exceed 50,000. So if the interest on those compensation does not exceed 50,000, then there would be no TDS. But if exceeding 50,000, TDS need to be deducted. And in case of this 50,000, there is no bifurcation of senior citizen, etc. For everyone, the limit is 50,000 rupees. Okay. Next, let's examine some example. On 1st October 2023, Mr. Harish makes a 6 month fixed deposit of 10 lakh, 9% per annum with ABC Cooperative Bank. That was cooperative society. That was not the cooperative bank. Okay. The fixed deposit mature on 31st March 24. So do we need to deduct the TDS or not? We have to find out how much interest we need to pay by that cooperative bank to Mr. Harish. So you can see it's 10 lakh, 9%, and deposit has been made on October. So we have only October, November, December, January, February, March. So only half months. Total interest would be 4,500. So it's less than 5,000. So there could not be any TDS deduction because it does not exceed the limit. Clear? Just a second. It's 10 lakh. Sorry, it's not 1 lakh. It's 10 lakhs. So that would be 45,000 rupees. And the provision says we need to deduct TDS at the rate of 10% on this. And the deduction 90 for interest would be 4,500 rupees would be the TDS value. So the interest would be 45,000, which exceed the limit of 40,000. So we need to deduct the TDS at the rate of 4,500 rupees. Okay. On 1st June 2023, Mr. Ganesh made 3 9-month fixed deposit of 3 lakh rupees each, carrying interest 9% per annum with Dwarka branch, Janakpuri branch, and Rohini branch of the same bank. So there is CBS system applicable. So under the CBS system, we have to accumulate all interest from different branches of the same bank to find out the applicability of interest on TDS. TDS on interest. So we need to find out how much would be the interest in this case. So the amount says 3 lakh for 3 branches, 9% for 9 upon 12 months. So that would be 60,750 rupees. So because it does exceed rupees 40,000, so TDS need to be deducted at the rate of 10% on this value. On 1st October 23, Mr. Rajesh started a 6-month recurring deposit of 2 lakh rupees per month at the rate of 8%. So 2 lakh, 8%, and from October 16, almost it's 8,000. It does not exceed 40,000. So there will be no TDS provision. So I believe you must have already gone through with these illustrations in your normal classes also. Okay. Moving on. Next important section is section 194C, that is for payment to contractor and subcontractor. A very important point, which I have noticed that also asked in examination, previous examination, I guess in May 2024 or November 23, based on this point only. If in case of payment to contractor or subcontractor, if the payment made by individual HUF, whether his turnover exceeding 1 crore rupees or 50 lakh as the case may be, but if the payment is for exclusively for personal purpose, suppose for construction of residential house, etc., in that case, TDS provision would not applicable if payment is made by individual HUF for the purpose of contract and exclusively for personal purpose. If payment has been made for construction of factory building, then TDS concept will be applicable. But if it is for personal purpose, the TDS would not be applicable. The rate of TDS has been prescribed as 1% if the payee is individual HUF. So rate depends upon on the status of payee, not payer. So if the payee is individual HUF, then 1%, and if payee is other than individual HUF, then it would be 2%. Who is the payee in this case? Contractor would be called payee in this case. So these are the rates you must have gone through with. देखो, हर TDS के section में ना, in every TDS section you have to learn some important points like the applicability. When which section which will be applicable on which payment. So like if the payment is regarding contract, we should know section 194C is applicable. If it is for interest on security, we should know it's 193. So at least you should learn firstly that which provision is going to be applicable on which kind of payment. Second thing, who is the payer, the eligible payer? In certain cases, individual HUF, those turnover does not exceed, is not included for the specific section, like for 194C, 194A, we have seen that. Then a very important point, the amount. If you exceed a certain amount, only in that case, TDS provision would be applicable in different cases. And then the rate of TDS. So these 4 points need to be learned in respect of each section. The applicability, the payer, the amount exempt, the limit of that amount limit, and the rate of TDS. Clear? These 4 points need to be learned in each cases. And you have also seen, like the way I am discussing the important points, other than these points, like the amount, the rate, etc. The other point we are discussing, like that not applicable in case of personal purpose, etc. We need to focus on those points also. So these kind of question could be or would be asked, like in the cooperative society does not fall in under section 194A, but if the turnover exceeding 50 crore, they need to be also follow these provisions. So these kind of things I am discussing with you in respect of each section today. Okay. So this is the time limit. Now the amount limit is again important in this case. If individual contract, we need to find it out. The limit is 30,000. So there would be no TDS. If the individual contract is not exceeding 30,000 rupees. But if the aggregate contract with the same person, like I am a payer and there are 5 contractors. With each contractor, I have done a contract of 25,000 each. So they are 5 separate contractors. They are 5 different pay. So there would be no need to deduct any TDS under section 194C. But if these are 5 separate contracts with the same person, if the pay is same, then the aggregate would be 1,25,000. So if the aggregate payment in a financial year to the same pay exceeding 1 lakh rupees, then TDS need to be deducted on full value. In this example, if you will see, on the first payment of 25,000, no TDS. The second payment, no TDS because it's 50,000. The third payment, no TDS because it's accumulated 75,000. The fourth case, no TDS because it's up to 1 lakh rupees. But the fifth payment, now the full TDS will be deducted on 1,25,000 either at the rate of 1% or 2% depending upon the pay status. If he is an individual HUF, then 1% of 1,25,000 need to be deducted, or if it's 2%, then if it is other than individual HUF, then 2% need to be deducted. So suppose it's 1%, that means 1,250 TDS need to be deducted from the last payment. So when payer will pay 25,000, the fifth payment, he will deduct total TDS of 1,250. So the remaining would need to be paid to the pay. So the total TDS on this contract as well as the preceding contracts of that financial year need to be deducted from the last installment value. I hope it's clear till now. Next is the same kind of example is over here. You can see ABC Limited make following payments to Mr. X, a contractor, for contract work during previous year. So you can read the example and let me know how much TDS need to be deducted and when, on which installment, and what should be the payment need to be made to the payee at the time of last installment. It's very simple. It will take not more than 1 minute for you. Okay, we'll tell. Abhishek Singh saying 1030 on fourth payment. Let's see. Look, on first payment, there would be no TDS. The second is total 45,000. Of course, no TDS. The third is 28,000 more. So together it would be 45, 55, 65. That means 63,000. $73,000. Then we have 30,000 at last payment. So total would be 1,03,000 at the last payment. So 1% would be deducted. if the contractor is individual HUF or other than the Mr. X. Fine. So that would be 1030, absolutely correct, and need to deduct out of this value of 30,000. Balance is, of course, 28970. Well done. Very well done. Moving on further. Okay, it's a very important clarification also over here. So the provision says, suppose if we are having a contract with someone and if somebody else is providing with material also, suppose we have a shop, bakery shop, and we sell from our shop like pastries, cake, etc. But we did not manufacture ourselves. So we give this work on the basis of contract to Mr. D, who manufacture those items on behalf of us. Now there is a contract like this. Suppose the material has been supplied by us. If the material has been supplied by the bakery shop person and the Mr. D also only providing the labor regarding it, then the full value of labor, the invoice with the value of labor only need to be required to be TDS deduction purpose. But suppose if Mr. D provide material plus labor both. Now suppose the invoice generated by Mr. D is like this. Material cost has been separately shown 2 lakh rupees and labor value is 40,000 rupees. So invoice is 2,40,000, but the value has been separately shown. Then material would not be the part of TDS deduction section 194C, because 194C is for work contract. It does not include the material component. So if material has been shown separately in a work contract, then it would not be liable to TDS. Only the labor part need to be deductible under TDS provision. But suppose in the same case, the invoice has been made like this, 2,40,000 combined value, and the labor and the material does not shown separately, then TDS need to be deducted on full value. So this paragraph trying to explain this concept, that in case of those contract in which material and labor both involved from the payee, so it depends, the TDS would be applicable on which value? It depends upon the invoice format. If in the invoice the material and labor has been separately shown, then TDS provision would only applicable on the labor cost. And if it does not so, the full value need to be considered as the work contract and TDS need to be deducted on full value. So it's a very interesting note. It may be noted that the term work would include manufacturing, supplying a product according to the requirement or specification of a customer by using material purchased from such customer or its associate. In such case, tax shall be deducted on the invoice value, excluding value of material. That means only on the labor value. But if it is possible only, it has been separately in the invoice, where the material component has not been separately mentioned in the invoice, what will happen? We have to pay higher tax. The tax shall be deducted on the whole of the invoice value. Okay. Tell me, if the material and labor has not been separately shown, so who is going to be in the loss? Whether this bakery shop person or Mr. D. So if Mr. D create invoice like this, so who will bear the loss, or the provisions are against Mr. D or the bakery shop person? Who is in a disadvantageous position in this case? The bakery person or Mr. D? So if you are not showing invoice separately, if you not technically showing the labor and material value separately in the invoice, then who needs to be in a disadvantageous position in this case? The correct answer is Mr. D, the payee, because Now, Mr. Bakery shop person, suppose he is A, payer will deduct higher TDS. So he will get less money. If the TDS rate is suppose 1%, so in this case only 1% of 40,000, he will receive 99% of 40,000. Only 1% he will not receive, Mr. D. But now in this case, he will only receive 99% of this value. So that would be a problem for Mr. D. So automatically, Mr. D will always try to show the value separate, because if he does not do so, then the amount he will receive would be lesser, because it would be 99% of total value only, not only the labor cost 99% value. Okay. Non-applicability of TDS provision. This is also a different, a special provision under section 194C. In case of transporter, if any transporter owns 10 or less goods carriages at any time during the previous year and is engaged in business of plying, hiring or leasing of goods carriages and has furnished a declaration to the effect along with his pen, then there is no requirement of TDS applicable. It's a provision which gives benefit to the transporters. Next is section 194H. The same concept, any person other than individual HUF who is responsible for paying income by way of commission other than insurance commission. Why it is excluded? Because we have a specific provision for that insurance commission, section 194D. Or brokerage to a resident shall deduct income tax at the rate of 5%. Individual HUF excluded, but only those individual HUF, those turnover is not exceeding 1 crore or 50 lakh. You can see, like section 194C, same provision. Like section 194A, same concept is over there. Fine. Now, time of deduction is again by payment or credit, whichever is earlier. Next, 6th point is important. And when I say important, that means there is something different in these points. Other concept in this provision would be solved only by if you are able to learn the applicability, the person, the limit, and the rate of TDS. The limit is over here is 15,000. And the rate of TDS is 5%. This is special. It says applicability of TDS provision on payment by television channels and publishing houses to advertisement companies for procuring or canvassing for advertisement. So there are technically two contracts in this case. One is there is client, there are advertising agency. So client technically pay to advertising agency. Clear? And advertising agency pays to the channel to telecast that advertisement, etc. So there are two separate agreements. One payment is from client to advertising agency. Another is from advertising agency to the channel on the basis of commission, etc. So on this payment, TDS provisions are applicable. On this payment, TDS provisions are not applicable. The provisions are just trying to explain these things. There are two types of payment involved in the advertising business. Payment by client to advertising agency and payment by advertising agency to the television channel, etc. So the provision says the applicability has been clarified in 1 and 2. Will be applicable on first type of payment. So TDS would be applicable section 194C on first type of payment. There will be no TDS under section 194C on the second type of payment. So section 194C would be applicable on only first kind of contract, but not in the second kind of contract. However, another issue has been raised in various cases as to whether the fees, charges taken or retained by advertising company from media company for canvassing booking advertisement. Typically 15% of the billing is commission or discount for attracting the provision of section 194H. So now they're explaining the provision of this query. The CBDT has clarified that no TDS is attracted on payment made by television channel newspaper companies to advertising agencies. So you can see in this case section 194C applicable, in this case section 194C not applicable. And when we talk about the reverse case, if the channel pays anything to the advertising agency, the payment would be called a commission, etc., but no TDS would be applicable in this case. It is also further clarified that commission referred to in question number 27 does not refer to payment by media companies to advertisement company for booking of advertisement, but to payments for engagement of model, artist, photographer, sportsman, etc., and therefore is not relevant to the issue of TDS referred to in this circular. Clear? There's a question also for your reference. You can see on first case, TDS under section 194C would be applicable. In this case, there would be no TDS under section 194C. You can go through with this provision, and I believe you must have watched the normal classes in which that faculty must have taken these kind of questions. Okay, we have to cover a lot of provisions. We just on 25 number page, and we have to cover almost 100 pages. So we have just done our 25%. Next is section 194I, and it's an important section, and it says about rent payment. In case of rent payment, who is going to deduct TDS? Landlord or tenant? Who will deduct TDS? Who will answer? Let's see. Landlord or tenant? Pooja is saying tenant, Abhishek is saying tenant, Bhumika is saying tenant. Okay. Of course, in case of TDS, the universal provision that payer need to deduct the TDS. And payer is the person who pay that amount. And of course, in case of landlord and tenant, who is the payer? The payer is the tenant. Absolutely correct. So if certain conditions are fulfilling, again, other than individual HUF, you can see that. And those individual HUF will be covered over here. Those turnover exceeding 1 CR or 50 lakh in the preceding financial year. Now, it is important because we have multiple rate of TDS in this case. 2% if the rent is for plant, machinery or equipment, or 10% in case of other rent. Time of deduction is again same, payment or credit, whichever is earlier. The threshold limit is 2,40,000 per annum. Okay. As in case of salary, the TDS need to be deducted per month because salary is a payment, of course, which has been made periodically, monthly basis. So TDS also need to be deducted monthly. And of course, in case of rent also, the same concept applicable. Rent is also a payment which need to be paid monthly. So TDS on that rent need to be deducted on month basis. Now, how it will happen? So if the rent is 30,000 rupees per month from April 2023. So that means the yearly rent would be total 360. And this is exceeding our limit, the threshold limit, 2,40,000. So from first month, TDS need to be deducted at the rate of 10% of the rental value. So rent is 30,000, TDS would be 3,000. So what will happen? Payer will start paying 27,000 to the pay. And 3,000 as a TDS need to be deducted and need to be deposited also. So generally, till now, their monthly payment of TDS deduction will be applicable in case of salary and in case of rent. In other cases, it is at the time of that limit exceeded. In case of interest also, we have discussed section 194A, that bank, etc. generally credit interest on quarterly basis. So they deduct TDS on quarterly basis. Or if half yearly, then half yearly. If some bank deduct or credit that interest monthly basis, and they also need to deduct the TDS on monthly basis. Clear? There the threshold limit is 2,40,000 rupees. Now we have a special clarification regarding the cooling charges. Payment made by the customer on account of cooling charges to the cold storage owners. So provision says cooling charges is something different from rental value. So on cooling charges, section 194I does not applicable. In case of cooling charges, section 194C would be applicable. The provision says clarification provision section 194I to payment made by the customer on account of cooling charges to the cold storage. So there should be something in the possession to be called a rent. Like tenant possesses the building. So if any plant and machinery and you are paying rent of it, so technically that is in your possession. But in case of cold storage business, the farmer is paying rent. But technically there is nothing in possession. He is paying rent for storage of his agricultural produce to the owner of the cold storage person. So technically there is nothing in possession of the tenant, and technically he is not a tenant only. So technically section 194I is not applicable in that case. The main function of the cold storage is to preserve perishable goods by means of a mechanical process, and storage of such goods is only incidental in the nature. The customer is also not given any right to use air, any demarcated space placed on the machinery of the cold store, and thus does not become a tenant. He just store his produced in that warehouse or cold storage. Therefore, provision section 194I are not applicable to the cooling charges paid by the customer of the cold storage. So section 194I does not include it applicable, but section 194C is applicable. However, since the arrangement between the customer and cold storage owners are basically contractual in nature, the provision of section 194C will be applicable to the amounts paid as cooling charges by the customer of that cold storage. If the other conditions satisfied, that payment of rent is more than 30,000, you are not an individual HUF. If you are individual HUF, then what kind of individual HUF? Whose turnover exceeding 1 CR or 50 lakh. The other condition need to be satisfied for applicability of section 194C. So other conditions need to check also. These are normal provision. You must have completed that. Other are point number 9, lump sum payment for premium. There should be no TDS in this respect. Section 194 IB is important, of course, for the purpose of examination. So you must have seen that in case of section 194 I, the rent, if paid by individual HUF, those turnover does not exceed 1 CR or 50 lakh. Those need not to pay TDS on rent. But there are separate specific provision has been made for now those individual or HUF, those were not covered under section 194I. Under section 194I, the rate is 2% or 10%, and the aggregate amount is 2,40,000. Now things are going to be changed. Now section 194IB require any person being individual HUF other than turnover exceeding 1 CR or 50 lakh. Why other than? Because for these persons, section 194I is applicable. So those individual HUF does not cover under section 194I. They are covered under section 194IB. So it's very important provision in my opinion. So in that case, now they have to deduct TDS at the rate of 5% of rent paid if the rent per month is exceeding 50,000 rupees. So in section 194I, there's a limit of 2,40,000 per annum, but in this case, the rent should be exceeding 50,000 per month. Threshold limit you can see under this section, tax has to be deducted at source only if the amount of such rent exceed 50,000 per month or part of the month during previous year. Clear? No requirement to obtain 10. What is the meaning of rent, etc.? That we must have gone through. Normal provision. Illustration number 7. The time of deduction is important. Please remember. This deduction is to be made at the time of credit of such rent for the last month of the previous year or the last month of tenancy if the property is vacated during the year. So, if rent exceeding 50,000 per month, it does not mean that you need to deposit TDS every month. You need to deposit TDS at the end of the month of that financial year. So, suppose the rent is 70,000 per month. So for full year, it would be 8,40,000. So in the month of March, TDS need to be deposited accordingly. But if tenant has going to vacate the property in December only, then TDS need to be deposited in the month of December accordingly. So this is very important, time of deduction, as the case may be, to the account of the pay or the time of payment, therefore in cash or by issue of check, etc., whichever is earlier. Is a question, you can get your answer of that provision time reduction. It says, Mr. X, a salaried person pays rent of 55,000 per month to Mr. Y from June 2023. Is he required to deduct tax at source? If so, when is he required to deduct the tax? Also compute the amount of tax to be deducted at source, etc. Kindly go through this provision. I would love to discuss that, but we do not have that much time that we can discuss these kind of examples. If we have spare time, I will definitely going to discuss this example. But this is very simple. If you understood the concept, then you will easily find out the calculation, how we need to do it. Section 194J, that is covering fees for professional or technical services, as well as royalty provision, as well as the directorship remuneration, etc. So, as well as the non-competent fees also included in this section. So total 5 kinds of payment has been included under section 194J. Every limit is separately 30,000, whether it's technical services. For the purpose of director, there is no threshold limit. So TDS need to be deducted anyhow. Rate of TDS is 2% in case of fees for technical services or royalty in the nature of consideration for sale, etc. 10% in other cases. However, if the person is involved in the call center, the pay, then the rate of TDS would be 2%. Whether it's a technical fees or professional fees does not matter. The limit has been separately made for each kind of payment, except in case of director remuneration, there is no threshold limit. It has been summarized in this beautiful table drafted on your study material. You can go through and you will understand each and every provision from this table for section 194J. Like an example is this, XYZ Limited makes a payment of 28,000 to Mr. Ganesh on 2 August 2023. Towards fees for professional service, another payment of 25,000 to him on the same date towards fees for technical services. So there would be no TDS because individual limit of 30,000 would be counted. It would not be aggregated, and individually neither professional payment nor technical payment exceeding 30,000. So there would be no deduction of TDS in this case. non-applicability of TDS under section 194J. You have seen that there was a concept, there was a provision under section 194C. If the payer is individual HUF and payment is made for personal purpose, then there was no section 194C is applicable. Almost same kind of provisions are here for professional fees. An individual HUF is not liable to deduct TDS. However, an individual HUF whose total sale receipt from profession exceeding etc., in which the fees for professional or technical service creator paid is required to deduction of such fees. But the special provision says, since this provision requires individual HUF to deduct tax or source only in respect of fees for professional service or fees for technical service, it can be inferred that individual HUF are not required to deduct tax at source under section 194J on royalty and non-compete fees. So the provision says individual HUF, those turnover exceeding 1 CR and 50 lakh in preceding previous year. So we are talking about previous year 22-23. So those payer are included in the definition of payer under section 194J only for technical fees and professional fees purpose. So if these individuals pay technical fees or professional fees, then TDS would be applicable. But if these individuals pay royalty or non-compete fees, then 194J not applicable. If the payer is a company, if the payer is a partnership firm, if the payer is a LLP, then whether they paid technical fees, professional fees, royalty or non-compete fees, TDS provision would be applicable, but only in case of individual HUF. Those are covered due to exceed of turnover in section 194J. So only if they pay technical fees or professional fees to any payee, TDS provision would be applicable. But if they pay royalty or non-compete fees, then section 194J is not applicable in case of individual and HUF. It's a very, very interesting and important clarification in section 194J. I would like to frame a question. If I would have been an examiner, I'm going to frame question on this point. Definitely. It's so interesting. And of course, if somebody has knowledge of these kind of provision, that means he have learned, he have read all the chapter, he have learned all the provision. So these are these minute and important things which has been given in study material. That other benefit also is there. What I was talking about, same as section 194C. Further, an individual or HUF shall not be liable to deduct income tax on a sum payable by him by way of fees for professional service, in case exclusive for personal purpose. So this benefit is only for professional fees, not is for technical fees. So if technical fees is paying for personal purpose also, TDS would be applicable. Other provisions are normal. One more important clarification regarding this hospital. If I have a medical insurance and I admitted into a hospital and the hospital bill is 5 lakh rupees and my medical insurance company reimburses that bill to the hospital. So the question arises whether TDS need to be deducted from those hospital services to a person, because the payer is the insurance company and that is not the patient. But the provision says that payment is on behalf of me for medical services. So TDS would be applicable on medical reimbursement from any insurance policy to that hospital, etc., because they are technically providing professional services. They're providing those services to me. But in this case, of course, on behalf of me, the payment needs to be made by the insurance company. TDS would be applicable. Again, a very important clarification. The CBDT has those circular numbers so and so who are making payment on behalf of insurance company to hospital for settlement of medical insurance claim, etc. under various schemes, including cashless, etc. This is because the service rendered by hospital to various patients are primary medical service, and therefore the provision of section 194J are applicable even for this case, the third party administrator case, TPA. Point number 8 is simple point. You must have gone through with yourself. Now section 194M. Now you must have seen that in case of contract, that is section 194C, individual HUF has been excluded from the definition of payer if their turnover does not exceed 1 crore or 50 lakh. Same in case of section 194H for commission, etc. And same in case of section 194J, professional services fees, etc. So now for those individual HUF, those does not covered under these three sections. For those, section 194M has been introduced for these payment. So technically in the same way section 194I was there for rent purpose. And for section 194I, individual HUF, those does not have turnover exceeding 1 CR or 50 lakh, not included. So for those section 194I be introduced only for those individual HUF, those are not covered under section 194I. In the same case, those individual HUF, those are not covered under these three categories and paying contract fees or paying commission brokerage or paying fees for professional service. So they have been included under section 194M. It's a very important provision in my opinion. The provision says in this case 5% TDS need to be deducted. We have discussed what is the meaning of payer. For carrying out work, contract work, same as section 194C. By way of commission, same as section 194H. By way of professional fees only, and same as section 194J. Other provisions are simple. Threshold limit is huge. It's like 50 lakh rupees. So if the payment of contractor, if the payment for brokerage commission, if the payment for professional fees exceeding 50 lakh rupees, then only TDS need to be deducted. Non-applicability. The reverse case, if section 194C apply, then section 194M cannot apply. If section 194H applied on that payment, then 194M cannot apply. Same 194J apply on professional service, then 194M cannot apply. So these are mutually exclusive cases. Either section 194M will be applicable or either section 194C, H or J would be applicable. No requirement to obtain 10. Give the example also like Mr. Ganesh, an individual carrying on retail business with turnover of 2.5 crore in the previous year 22-23. So he is a kind of individual who is covered due to exceed of limit of 1 CR. So if he make payment of contract payment for repair of residential house, 5 lakh rupees. So he's covered section 194C because he's fulfilling this condition. But because the payment is for personal purpose, and we have seen that for personal purpose, section 194C is not applicable. 194M cannot be applicable. For personal purpose, it is exempted and this is not applicable. Why not applicable? Because turnover exceeding the 1 CR or 50 lakh. Payment of commission to Mr. Valish for business purposes 80,000. So section 194H will be applicable. Why H? Because this person has that individual whose turnover exceeding 1 CR. Now, Mr. Rajesh, a wholesale trader whose turnover was 95 lakhs. So now section 194M could be applicable. Now, construction payment for reconstruction of residential house made during the period January to so and so. So the provision says total payment is now 55 lakh in the financial year, and it is exceeding 50 lakh. So now TDS would be applicable because the payment is total 55 lakh rupees. Clear? Even for residential purpose, because the exemption is under section 194C in case of residential house, not under section 194M. So TDS would be applicable under section 194M. 190C is not applicable. A salaried individual, payment of brokerage for buying a residential house is 51 lakh rupees. So yes, section 194M is applicable. Next is Mr. Dheeraj, a pensioner. Contract payment made during October-November for reconstruction of residential house. So he followed section 194M, but the payment does not exceed 50 lakh rupees. So no TDS under section 194. The detailed solutions is over here. You can go through it. Now section 194N, and technically it is not a payment. Generally TDS provisions applicable on certain kinds of payment, but it is not technically a payment. It is applicable on withdrawal of cash from a bank exceeding a specified limit. Section 194N provides that every person, it's a simple provision, there is nothing more to discuss. So if in case cash exceeding 1 crore during the previous year to any person from one or more accounts maintained by such recipient person, with it shall direct a TDS of 2% of such sum. However, if the recipient is a cooperative society, this limit of 1 crore would be 3 crore. So if the withdrawal is 1 crore 10 lakh rupees, then only upon 10 lakh rupees, 2% TDS would be deducted. In case of society, if the withdrawal is 3 crore 50 lakh rupees, then only upon 50 lakh, 2% would be deducted as TDS. The rate of TDS would be changed if that person does not file return of income in preceding 3 years, except that year in which that withdrawal has been done. So if modification in rate of TDS and threshold limit of withdrawal for recipient who has not furnished return of income for last 3 years, what would be the change? Now the percentage would be 2%. The sum where the amount or aggregate amount as the case may be paid in cash. So generally TDS need to be deducted exceeding 1 CR. But if you did not file your ITR for all 3 preceding previous year, then after 20 lakh up to 1 crore, the TDS would be 2%. For cooperative society, after 20 lakh up to 3 crore, the TDS would be 2%. So generally the rate was 2% after 1 CR. So that 1 CR limit has been reduced to 20 lakh rupees for both cases, whether it's normal case or society case. After 20 lakh, now TDS would be deducted at the rate of 2%. For normal case up to 1 CR, for society case it's 3 CR. And 5% after 1 CR, and in case of society after 3 crore, the rate of TDS deduction would be 5%. We have the detailed example also in the question. Kindly go through with this example. It's very important. And the question specifically says from point number 1 to 6, ITR, return of income has been filed. So that means you have to find out the TDS as per normal rate 2% up to 1 CR, exceeding 1 CR and exceeding 3 CR. And from point number 7 to 9, it says the return does not file from last 5 years. So in these cases, you have to apply the specific provision of 2% and 5% both. Clear? You must have gone through this. I would Love to solve this question, but we don't have much time. The other TDS provisions are premature withdrawal from employees' provident fund. So you need to learn the sections of TDS, the nature of payment, the threshold limit, who is the payer, the rate of TDS, and some specific provision, if any. In these points, section 194 is for dividend. The amount is 5,000. Rate is 10%. You must have gone through in detail with this provision. So I will take up only those provision which have something important or something different is there. Fine. Then section 194B, the aggregate limit is exceeding 10,000. Then section 194BA, winning from online lottery or games, online games, sorry, and 194 double B from winning from horse races, almost same provision for all three, section 190B, BA, and double B. Then we have insurance commission, section 194D, aggregate amount is 15,000, rate is 5% or 10%, depending upon the pay. 194DA is any sum under a life insurance policy not fulfilling the condition specified in section 1010D. The important is section 194IA. So IA again. So it says payment on transfer of certain immovable property other than agricultural land. So if you transfer agricultural land, then there is no TDS requirement, whether it is in urban area or rural area. So agricultural land is outside the purview of this TDS provision. But other than agricultural land, if there any land or building has been transferred and the consideration or stamp duty value, any of them is exceeding or equal to 50 lakh rupees. Suppose the consideration is 40 lakh and stamp duty value is 51 lakh. Provision would be applicable or vice versa. Consideration 51, stamp duty value 40, still it would be applicable. So if any of these value is up to 50 or more, the provision of section 194 IA would be applicable. Any person, transferee, etc., resident, the rate is 1% of the consideration or stamp duty value, whichever is higher. Suppose stamp duty value is 60 lakh and consideration 65 lakh, both exceeding 50 lakhs. So on the higher value, TDS would be deducted. And if it's vice versa, like stamp duty value is 65 lakh and consideration is 60 lakh, again, TDS would be deducted on 65 lakh rupees. General provision 194 case for income on units other than the nature of capital gain. 194 LA's compensation on acquisition. So this is also important. So if the compensation exceeding 2,50,000, again, other than agricultural land situated in India. So threshold limit is 250. So if the compensation exceeding 250, TDS need to be deducted at the rate of 10%. Pension. This is again important for the purpose of examination. I believe that the question regarding section 194P has been asked in the examination also. After completing the provision is pension, and it says if your pension exceeding the basic exemption limit under default tax limit, it's 3 lakh rupees. Other cases is 250 or 3 lakh or 5 lakh depending upon the case. Notified specified banking company, if you are getting pension from them, the person is specified senior citizen. Rates depending upon the amount of pension or income he is receiving from that bank, the amount of tax would be decided the rate of TDS. A specified senior citizen means, this is important for the purpose of examination. Kindly do remember this. Means an individual being a resident of India, age of 75 years or more, is having pension income and having no other income, and also getting interest from the same bank from which he is receiving the pension. Income except interest income received or receivable on account of maintained by the same specified bank from which he is receiving his pension income and furnish a declaration, etc., in that case, he need not to file return of income. The provision of section 139 relating to filing of return would not apply to a specified citizen for the assessment year relevant to the previous year in which tax has been deducted. So if the tax has been deducted and there is no other liability, no tax liability upon that senior citizen, he is earning only pension income and interest income, his age is 75 years or more, and TDS has been deducted on his salary or other income, then there is no requirement for him to file a income tax return. Purchase of goods. This is 194Q. And here we are discussing section 194Q for purchase of goods. From the point of view of buyer need to deduct TDS on this. Buyer, if exceeding certain limit of purchase, 50 lakh from a single person, then 0.15% of TDS need to be deducted from the value, from that payment. But there are more cases under section TCS also. Under section 206C1 we have, 206C1H we have, I guess. Just a second. There are multiple cross provisions regarding this under TCS also. Okay. So there are section 206C1, 1F, 1G also there. So if buyer does not able to deduct the TDS, so if section 194Q is applicable, then section 206(1)H would not be applicable. If section 194Q does not applicable due to certain condition need to be fulfilled, then TCS need to be deducted by the seller. Sorry, TCS needs to collect by the seller in this sale of goods case. So there are also provision which might confuse you whenever you read section 194Q over here. And if then you will read section 206C, 1H, 1F, 1G or 1. You might feel that they are almost talking about the same provision, but it's not so. Section 194Q is primary section. It overrules section 206C1H. So if these all conditions are fulfilled, like turnover exceeding 50 lakh, buyer turnover in the preceding year must exceed 10 crores rupees for the applicability of section 194Q. So if buyer turnover exceeding 10 crore rupees, the payment exceeding 50 lakh rupees and other conditions are applicable, then TDS need to be deducted by the buyer under section 194Q. Now suppose buyer turnover does not exceed 10 crore in the preceding financial year, then section 194Q cannot be applicable. So in that case, seller needs to collect the TCS in these transactions if his turnover exceeds the specified limit. So these are interconnected provision. Whenever you read section 194Q, kindly also read the provision regarding section 206C1H. So you would be able to correlate the provision with each other and you will be able to understand when 194Q will be applicable and when section 206(1)H would be applicable. So these are interconnected provisions. Now 194R is for any benefit or perquisite whether convertible into money not arising from business, The TDS need to be deducted at the rate of 10% if the aggregate value exceeding 20,000 rupees. We have specific question. You can go through that and you must have already gone through with these questions, I believe, in the normal class. Okay. illustration 10, 11, you must have gone through. I would have taken these illustration, but we are short of time. I have to solve some question of advanced tax section 234B and C and advanced tax liability also, because there was no question regarding advanced tax liability in study material, and there is no question for section 234C also in the study material. So I would like to solve those questions which do not have actually anything in the study material for practice purpose. So these provision regarding TDS, like filing of TDS return, etc., no reduction in certain cases, lower rate of TDS, these are procedural aspect now. We have discussed almost all the important TDS concept. We will now move on to the advanced tax provision. Okay. Quoting of your PAN number in TDS. If you do not give your PAN number, then higher rate of TDS would be charged. The rate would be at the rate prescribed in the Act, the rate in force, or 20%. But in case of 194Q, it could maximum be 5%. So higher of these three would be applicable over there. The Advanced Tax Payment Section 2072-219. These provision we going to discuss after a short break. So, Mr. Bhargav, can we go on a short break? We will come after a short break. Okay, Mr. Bhargav? भार्गव जी कंटिन्यू करें. Welcome back, everyone. So I believe you must have taken your tea, coffee, etc. And we are moving on to complete the gigantic topic that is advanced tax, TDS and TCS. Huge topic to cover, a lot of things. So now we are discussing about the advanced tax concept. What is advanced tax concept? The provision says if the advance estimated tax, if your estimated tax exceeding equal to 10,000, then you have to pay advance tax accordingly on certain specific dates with certain specific percentage of your estimated tax liability. It is not applicable for those senior citizen who do not have any business income. So if you are a senior citizen and you does not have any business income, then advance tax provision is not applicable upon you. The concept you must have already gone through with the normal class. Computation of advanced tax. I'm going to solve a practical question of advanced tax, so that would give you an insight that how this question could be asked in the examination and how we are going to solve it. So in the MCQ part, I have already included practical questions, one regarding advanced tax, one regarding 234 C interest provision calculation, a complete question on that. So advanced tax provisions says there are certain dates on which you have to pay a certain amount of tax. That is on or before 15th of June, you have to pay not less than 15% of advanced tax liability. So if somebody asks that if I do not deposit 15%, what will happen? Then section 234C interest would be applicable. On or before 15th September, not less than 45% of advanced tax liability as reduced by the amount, if any, paid in the earlier installment. So balance is technically 30% you need to deposit. On or before 15th of December, it should be 75% reduced the amount already paid. So technically, balance 30% need to be deposited, and on or before 15th March, full amount of tax liability need to be deposited. Remember, technically, for the purpose of advanced tax, we have to calculate our estimated tax liability as per normal provision of tax 4 times in a financial year. On 15th June, you will find your estimated tax liability up to 31st March. That's why it's named estimated tax liability. So on 15th June, I have to estimate. I have the data of 2.5 months, actual data, April, May, and 15 days of June. So technically we have 2.5 months actual data. On the basis of that data, we have to estimate what should be my final income in this financial year and what should be the deduction, what should be the tax on that income. And whatever the estimated income and tax you calculate, you have to deposit at least 15% of that tax up to 15th of June. Now on 15th September, again, you have to follow that process. It might be possible that your estimate could be changed. For example, on 15th June, you estimated your total income as 11 lakh rupees in that year. But it's not mandatory that on 15th of September, your estimated of that year income remain 11 lakh. It could be more or less. Suppose there is a loss incurred between this duration. There could be a capital gain, there could be a casual income, there could be other interest income, there could be profit increment due to sale increment. So income could be changed. The estimated could be changed. It could be like the same case. Today, if I'll ask you that how much marks you will able to get in the tax paper in your examination as per your today preparation and your estimated preparation till the time of examination. So might be some of you could say, okay, according to today actual condition and whatever time I have left before my examination, I would able to revise the question, etc. So I will be able to get 50 marks in tax, might be. And now after 10 days, if I'll ask you the same question, So your marks my estimated tax, your estimated marks might be increase or decrease also. And if I'll ask this question just before 1 day before the examination, it could be changed. And of course, after examination, it could also change. So technically, exactly on the same basis, we have to calculate our income 4 times in a financial year. And whatever is the estimated income, on the basis of that, we have to deposit a certain amount as advance tax. You can see my most accurate estimate would be on this date, because on 15th March, I would have 11.5 months actual data, and only I need to estimate next 15 days income. So most accurate advance tax liability would be on this date, less accurate would be on this date, more less accurate might be on this date, and the lowest accurate advance tax liability would be on 15th of June. So the good thing is, in the examination, the examiner will provide you this information that on the 15th June, how much is your estimated income. You need to calculate the tax on that estimated income. On 15th September, they will provide you the difference, the variation which have been done between 15th June and 15th of September. The same way, they will provide you the variation from 15th September till 15th of December. So you will have that estimated income from the question. You have to calculate your estimated tax on the basis of that information, and then you need to calculate the advance tax liability. The important note says any amount paid by way of advance tax on before 31st March shall also be treated as advance tax paid during each financial year ending on 31st March. So the date is 15th March. But if you pay any advance tax up to 31st March, it will assume that it has been paid on 15th of March. So in that case, there would not be any interest under section 234C. If you belongs to a business having presumptive taxation scheme, section 44AD, which includes 6% or 8% of your receipt as profit, or 44ADA for professionals, etc., in which you can declare your 50% of revenue as your profit, deemed profit. So if you fall under that category, then for the purpose of advance tax, only one installment need to be done, and that is the last one. So for those person, only one date is 15th of March, and 100% of your estimated tax liability need to be deposited. They do not need to follow the date of 15th June, September, December. Only one date is there to calculate and deposit your advance tax liability. That is 15th of March. Next, those provisions must have been discussed. Now we have interest for non-payment or short payment of advance tax. So if you pay 90%, less than 90% of your assessed tax as advance tax up to 15th of March, whatever payment you made as in your estimated tax, suppose your assessed tax, your actual tax comes 1 lakh rupees. And up to 15th March, the total advance tax paid by you is suppose 80,000. So it is less than 90% of your assessed tax. So 234B interest would be charged on the difference, that is upon 20,000 rupees. Interest would have been charged. The rate would be 1% per month or part of the month. It would start from 1st April 2024 till the time when the regular assessment has been done or income has been determined under section 143(1). So this is the rate of interest. The amount is calculated would be on the difference. This is the time duration. Now 234C is for specific dates. Like the first date was 15%. The second is 45%. The third is 75%. The last is 100% as per advance tax. So if you deposit less than 15%, suppose you deposit only 10% of your estimated tax liability, then on this difference of 5%, you need to pay interest at the rate of 1%. And for 3 months, it would be fixed 3%. The date, the 15th of September, you need to deposit 45%. Suppose you deposit only 30%. So the difference 15% liable to interest, the section 234C. Same in case of 75%, same in case of 100%. But there is a special condition. In advance tax provision, the minimum percentage need to be deposit on 15th of June is 15% and on September is 45%. But to charge interest under section 234C, the payment should be not less than 12%. And in case of 45%, it should not be less than by 36%. In these dates, it's same 75% and it's 100%. So there is difference in the provision and the applicability of interest in this case. You can see the specified dates 15, September, December, March. It's specified percentage 15, 45, 75, 100. The shortfall, that is difference. Difference is 15% less advance tax paid, 45% at advance tax date. But there is a provision which says that in case of 15th of June or 15th of September, generally we assume that if we pay less than 15% or 45%, interest would charge. But there is a clarification, there is a change, that interest would be charged if you deposit less than 12% or less than 36%. In this case, the limit is same. It should be 15 and 45%, but due to some reason, the interest would be charged only if, as on the first date, that is 15th of June, if the payment of advance tax is less than 12% or less than 36% on September case. Other case, the difference would be calculated as per 45%. Difference of tax would be calculated as per 45% and 15%. But for the purpose of applicability, the limit has been changed to 12% or 36%. We will discuss this concept with the help of a solved example. Now, TCS provision on certain transaction of goods in alcoholic liquor, etc. You must have gone through with these provision. The first point are specific tenders. The second is for parking lot, etc. The third is for sale of motor vehicle exceeding 10 lakh rupees. This is also important for the purpose of examination. Remittance under LRS or RBI through authorized dealer or purchase of an overseas tour package. So we have amendment number 2 in this case also. The amount and limit has been changed. So these limits have been changed. Amendment is for these provisions. Amendment number 2. Rates have been changed, slightly changed, very small change. Sale of goods of value exceeding 50 lakhs. So this is in response of, this is versus section 194Q. So if Q is applicable, then 206C1H would not be applicable. 194Q is applicable on buyer. So if buyer fulfilling these conditions is turnover exceeding 10 CR, total value exceeding 50 lakh, etc., then TDS need to be deducted. But suppose if the buyer turnover does not exceed 10 crore and other condition is satisfied, then TCS needs to be collected by the seller from buyer. If that, again, the amount limit is same, more than 50 lakh rupees as per section 206C1H, tax also need to be collected by the seller. And the rate is 0.1%. Amount exceeding 50 lakh rupees. Okay. Overseas tour package, buyer, seller explanation has been given. There is a seller definition for the purpose section 2061CH. Higher rate, of course, could be applicable if you do not furnish your PAN number, etc., or you do not file your return of income, etc. I believe you must have gone through with these all provision in normal class, or if you have not watched the normal class, kindly watch them for the detail of these provision. So I would like to solve MCQs and amendments and past year questions and question related to advanced tax and 234C. Moving on to our amendment part, there are 3 amendments, and I guess only 2 are relevant for the purpose of examination. One is just the definition change. So amendment for the purpose of TDS or TCS. Page number 24, we have amendments. Just a second. Here we go. We have amendments in advanced tax or TCS and TDS topic. Only there are amendment for TDS provision. Section 194A was interest on securities, interest on other than interest on securities. There's one specific scheme has been included. So there is no technically amendment, but there is inclusion of a special or new scheme. The central government has wide notification number so and so. Mahila Samman Savings Certificate 2023 has been introduced. And these savings certificate is a one-time scheme available for 2 years. That is from April 23 to March 25. It offers a maximum deposit facility up to 2 lakh in the name of a woman or a girl for 2 years at a fixed interest of 7.5% compounded quarterly. So consequently, no tax under section 194A would be deductible by the post office on interest paid or credited under this scheme, since the amount of interest would not exceed 40,000. The 2 lakh 7.5%, so the amount of interest would not exceed, so it would be outside the purview of TDS provision. You can go through with the detailed amendment from over here. Fine. This amendment provisions has been already uploaded on the BOS portal. You can go there and you can download it and you can refer it also. The second amendment is for section 194BA, that's for online gaming activities. The provision says in some online games, there are very nominal account winning, like 1 rupees, 2 rupees, 5 rupees, 10 rupees, etc., like Dream 11, etc. So it is not feasible or possible to charge TDS on that minute amount or that tiny amount of winning. And the collection is also very difficult in this case. So the clarification has been given by the department. The provision says new section 194BA has been inserted. Required income by way of winning from any online game during the financial year on the net winning in his user account, and the rate of TDS is 30%. Such net winning from online games during the previous year would chargeable to tax at 30% under section 115BBJ. The tax would be calculated on net winning from such online games computed in the prescribed manner. Now the question is this: there are a large number of gamers who play with very insignificant amount and withdraw also very small amount, deducting tax at source on section 194BA. For each insignificant withdrawal would increase compliance for tax deductor. Can there be relaxation to ease compliances? Of course, that Dream 11, etc., they are the pair. So for those person, this compliances is very difficult because there are multiple thousand or maybe lakhs of pay who are actually withdrawing a small number of amount. So for those purpose, a clarification or you can say relaxation has been given. Tax may not be deducted or withdrawal on satisfaction of all the following condition, namely. So if all these conditions have been fulfilled, then TDS not to be deducted. Net winning comprised in the amount withdrawn does not exceed 100 in a month. So in a month, if total amount is 100 rupees of winning, 100 rupees of amount is withdrawn, then there is no requirement of TDS deduction. Tax not deducted on account of this concession is deducted at the time when the net winning comprises withdrawal exceed 100 in the same month or subsequent month, or if there is no such withdrawal, at the end of the financial year. So if the withdrawal is exceeding 100, then TDS need to be deducted. And if there is no withdrawal, then TDS need to be deducted at the end of the financial year. The deductor takes responsibility of paying the difference if the balance in the user account at time of tax deduction under section 194B is not sufficient to discharge the tax deduction liability. This provision already mentioned in section 194B and BB earlier also. Clear? There are other clarification. You can go through it. Now we have third important clarification regarding those provisions, group activities we have discussed. Section 206C1G, that was LRS, liberalized remittance scheme limit has been slightly amended. So these are the new limit. Up to 30th September it was different, and after that it has been different. So now from on or after 1st October 23, provision has been changed. So remittance for the purpose of education other than 2 below or medical, no TCS up to 7 lakh, 5% on the amount or aggregate of amount in excess of 7 lakh. These will be checked in aggregate, not individual 7 lakh will be checked. Okay. Remittance out of loan obtained from any financial institution as referred under section 80E. No TCS up to 7 lakh, 0.5% of the amount or aggregate of amount in excess of 7 lakh rupees. Remittance for the purpose other than mentioned in 1 and 2, no TCS up to 7 lakh, 5% on the amount of aggregate, no TCS up to 7 lakh, 20% on the amount of aggregate on or after 1st October 2023. Overseas tourist package, 5% without any threshold limit, 5% up to 7 lakh and 20% above 7 lakh rupees. Guidelines also have been given over here, so you can go through these guidelines. Those were the amendments. Now we are moving on to our MCQ part. Let's see. MCQ number 1, kindly read yourself, and we will discuss these MCQ very fast because we have to cover 32 MCQ, and I would like to solve those 234C question and advanced tax question also. So the deduction of tax at source from salary shall be made at the time of. The correct answer is not C, it's B. For salary purpose, it's not C, it's B. Payment of salary. It's not on accrual or whichever is earlier case. Okay. Next is reduction of tax from salary as per section 192 shall be 10, 20, C or D. What is the correct answer? The correct answer is, of course, C, at the average rate of income tax. Very well done. Next is reduction of tax rate from accumulated balance of the recognized provident fund withdraw by the employee shall. Section मैं आपको बता देता हूँ. 192A we are talking about. So what is the rate applicable for that? Withdrawal rate is correct, 10%. The liability to deduct tax at source in case of income from interest on security arise at the time of. The correct answer is, of course, C, whichever is earlier. For salary, it's payment. For maximum other cases, it is always payment or credit, whichever is earlier. No TDS on interest on listed debenture is to be done by the company in which public are substantially interested. The correct answer would be D, because it should be 5,000, but the limit is over here 50,000. So no answer is correct. So the correct answer would be D. So it is not this. The limit should be 5,000, but it has been 50,000 over there. If it is 5,000, then the correct answer would be C. But now because nothing is correct in A, B, C option, so the correct answer would be D. The rate of TDS in case of listed debenture for the financial year 2023-24 is the correct answer is D. B, an individual who is not carrying on a business has borrowed a sum of 2 lakh on first 423, 15% per annum from a finance company. B in this case should deduct tax on such interest paid amounting to. Seventh is a good question. Read it carefully and then give me the answer. Okay, Abhishek is saying D. Why it's D, Abhishek? Why? Can you explain? Why the option is D? Okay, Sejal is also sending answers. Okay. Kavita Kula is saying less than 240. We are talking about interest provision, Kavita. Interest. It's not rental provision we are discussing. It's interest. So the answer is D, because Mr. B, an individual who does not carrying business. So that means section 194A talks about interest on TDS. In this case, an individual HUF only those covered having turnover exceeding 1 crore. Because he does not carry any business, that means he does not fall in this category of 1 crore category person. So he not liable to deduct any TDS. B has defaulted a sum of 3 lakh rupees on 1st April 23 with a scheduled bank for 1 year at the interest rate of 8% per annum. The bank should deduct tax at source amounting to. Correct answer is D. Why? Because it's less than 40,000. Interest would be only 24,000 and the limit for bank is 40,000. So it's not more than 40,000. So there would not be any TDS. No tax is to be deducted at source if winning from lottery or crossword puzzle, etc. If the correct answer is, of course, D. Mr. B has won a lottery of 1 lakh on 11th October 23. TDS on such winning amounting to be. Very simple question. The correct answer would be A, 30%. The person responsible for paying to any person any income by way of winning from any online game shall deduct tax at the rate of. The rate is D, 30%. The tax has to be deducted at source from the winning from any online game. What is the correct answer? This is the amendment question, what we just discussed. Correct answer is, of course, D. Next is, B has won a horse race on 10th December 23 and it's entitled to a prize of 3 lakh. The race club should deduct the tax at source. How much? B. Correct. B has won a horse race. Of course, the correct answer would be C. These are simple questions. Be an individual whose turnover of the business for the preceding year exceeded 1 crore has engaged a contractor for building his residential house. These are important things to be noted in question every time. On 15/12/23, R has made a payment of 5 lakh rupees, but because it's for personal purpose, there could not be any TDS concept. A company has given an advertising contract to an advertising agency. On 1st 12/23, it has paid a sum of rupees 240 to the advertising agency, a firm. What should be the TDS value? That would be 2% because the payee is a partnership firm. If it is an individual HUF, it would be 1%, but in this case, it's 2%. Section 194C is applicable. B Limited, a firm of contractors, have given some work contract to W Limited, a subcontractor, on 11/9/23. It has made a payment of 4 lakh to W Limited. B Limited should deduct the tax amounting to. Correct. Okay, let me discuss first. Look, we have completed till 17th of question. We will come back on these MCQs. These are very simple, and I believe you must able to solve all these. But before that, I would like to solve that questions of advanced tax and 234s. That is more important to solve those questions. So now we have the question. It says estimated gross total income of a firm is 30 lakh rupees. We will solve it over here. The question says estimated GTI of a B and company of firm is 3 lakh, 3 lakh, which includes, sorry, 30 lakh, which includes, there is a B and company. GTI is equal to 30 lakh after including long-term capital gain chargeable to tax at the rate of 20%, 10 lakh rupees. This capital gain has arisen on 16th September 2023. You need to calculate the advance tax liability assuming 2,80,000 TDS paid in or deducted in May 2023. So we have the question. Now we have to solve it. So this kind of question might be given in the examination. And how we need to solve it? We have to calculate our tax liability 4 times. And the first date is 15th of June 2023. So capital gain arise on 16th September. So do we need to include the capital gain in our GTI on 15th June 2023 or not? Of course not. At this time, till 15th of June 2023, what should be my GTI or TI according to the above information? It would be only 20 lakh rupees. On this 20 lakh rupees, what would be my estimated tax liability? Because it is a partnership firm, so tax rate would be 30%. That means my tax would be 6 lakh rupees. And after adding 4% of cess, the estimated tax liability would be 6,24,000 rupees. Clear? TDS has been deducted in May 2023. So I have to deduct the TDS also from my tax liability. So balance tax liability which needs to be paid as on 15th June 2023 for the full year, the balance estimated tax liability would be 3,44,000. And 15% of this would be my advance tax liability. So that would be 51,600 rupees. Now second date would be 15th of September 2023, and you can see till now we do not know about the capital gain because it has arisen on 16th of September. So till 15th of September, my estimated GTI would remain the same. My estimated tax would remain the same. And now I need to pay 45% of my estimated tax. That is 1,54,800. Out of this, I have already deposited 51,600 on 15th of June. So remaining would be my advance tax liability. That would be 1,03,200 rupees. Now things will change on 15th of December. Why? Because now one more income has been added, and that is capital gain having a tax rate of 20%. Now at this time, my income is 20 lakh rupees and long-term capital gain is 10 lakh. Tax on this would be 30%, same, 6 lakh. And tax on capital gain would be 2 lakh. So now my estimated tax would be 8 lakh rupees. 4% cess, that would be 32,000. So total tax would be 8,32,000 rupees. Out of this value, TDS has been paid already 2,80,000. So the balance is 5,52,000 balance advance tax liability, and I have to deposit 75% of this value. That will come 414,000. Out of this value, we have deposited already advance tax 51,600 and 103,200. So the balance is now my advance tax liability, and that would be 2,59,200 rupees. Now the last date, things would remain the same. On 15th of March 2024, same. Tax would remain same. That is 5,52,000. Need to deposit 100% of it. Whatever we have deposited earlier need to be deducted. 51,600, 103,200 and 259,200. So balance is the advance tax liability on 15th March. That would come 1,38,000. So you need to solve the question like this. You have to calculate the tax on 4 different dates, and if the income has been changed between those dates, it could increase, it could decrease also. Then you have to again recalculate tax of the year considering that particular change, and your tax liability could be changed according to that variation. So that was question number MCQ number 32, I guess. Now we have one more question. This is for advanced tax provision. Now we have a question for 234C. If advance tax does not paid on time, then how we need to calculate interest under section 234C? So the question has been given over here that Mr. B, age 66 years. Age 66 year, files a return of income declaring an income of 10,40,000 for assessment year 24-25. TDS 13920 has been deducted. B, shifting opt-out default tax regime. Advance tax paid as under. On 15th June, we have paid 12,000. 15th September, we have paid 36,000. On 15th December, we have paid 30,000. And 15th of March, we have paid 25,000. So now we need to calculate, first of all, the tax liability on the income. Then we'll solve it further. Tax on 10,40,000 rupees and he's a senior citizen. So the tax liability would be total tax, including cess, 1,26,880 rupees. TDS has been deducted 13920. So the balance tax liability is 112960, which need to be deposited on the specific date with a specific percentage. So now we will solve this question. We have specific information of 12,000. Open that information, other sheet. So you can see the tax was the tax liability came 1,26,880 rupees. The TDS which has been deducted was 13920. So balance tax was 112960. Now the first date was 15 June 2023. Applicability of section 234C. The date or the amount need to be deposited under advance tax on 15th June 2023 is 15%. But advance tax provision would be, interest under section 234C would be applicable if the payment has been made less than 12%. So if the payment has been made less than 12%, in that situation, advance tax, interest under section 234C need to be applicable. So now we need to find what was the 12% of value of total tax. So my total tax liability was 112960 and 12% would be 13555. So the 12% of this value we have to calculate. It would be 13555. So this amount need to be paid to avoid interest under section 234C. But what advance tax we actually paid? We paid on the first date, on 15th of June, we paid only 12,000 rupees. So that means we have paid less than 12%. At least the payment should be 13555 and the payment has been made only 12,000. So now we need to find out the difference to charge interest on it. The amazing thing is this: for the purpose of difference of amount, we will take 15% of tax minus advance tax paid. For this purpose, you should not take this value. You should not take this value. This is only to check the applicability of section 234C. For the purpose of calculation, we again take that 15% of tax value, and that would come 16,944 less advance tax paid actual 12,000. So balance is 4,944, on which interest need to be charged. That is 1% for per month, and for 3 months we need to charge. So directly we can apply interest on 234C, 3% for first default. Now here is the interesting thing. There is a rule number 119A of Income Tax Act, which says for the purpose of calculation of interest on any amount, whether for refund or etc., that amount will be taken in multiple of 100 only. So if that is 4,944, for the purpose of calculation, we will take only 4,900 and 3% of this value would be my interest on 15th of June default under section 234C provision. Now on next date, that was 15th of September, the applicability, for the purpose of applicability, the percentage is 36%. The 36% comes to 40,666 value. Advance tax paid on this date was earlier 12,000, and on this date it has paid 36,000. So total payment of advance tax on this date is 48,000. The total date amount required to be paid 40,000, but we have paid 48,000. So there is no shortfall, and there is no shortfall, so there would not be any interest under section 234C. Now the next date is 15th December 2023. Now things will be synced. Whatever amount of percentage has been mentioned, that will same should be taken over here. 75% of tax need to be paid, and the 75% would come 84720. 48,000 already has been paid till this date, and remaining we have paid 30,000. So total we have paid only 78,000. Now we can take the difference directly. In this case, we cannot take the difference because we need over 15% over here, but the value was as per 12%. But from third date, we can take the difference directly, and the difference would be 6720. Again, we will take as a multiple of 100. It would be 6700. 3% of this value, that would be 20 and 1. The last date would be 15th of March 2024. Now need to pay 100%. Tax was 112,960. Till now we have paid already 48,000 plus 30,000 and plus, sorry, we have paid already 78,000 and now 25,000. So total payment has been done now 1,03,000. Now difference can be directly find out. It is 9960. You will take in the multiple of 100. And now the last date, the interest rate is only 1%. For these 3 dates, the rate is 3%, 3%. But for the last installment, the rate is only 1%. So that will come 99 rupees. Total pre-interest under section 234C, total interest need to be paid is 447 rupees. So this is how we need to calculate 234C interest calculation. We have to calculate the tax, and now we have to find out whether on the first date it should not be less than 12%. If it is less than 12%, then only the provision of 234C would be applicable. But applicability would be checked as per 12%, but interest would be calculated as per 15% provision. Remember this. In the same way, on second date, the applicability would be checked 36%. In our case, there was no underpayment of tax. Suppose if there is underpayment of tax, suppose this is not 48,000, this is 39,000. Then difference would be taken as per 45% minus payment made. From third and fourth date of payment, the eligibility and the difference provision would remain the same. Rule number 119A of Income Tax Act 1961 says, if there is any calculation of interest under income tax on any amount, that amount should be taken at multiple of 100 rupees. Okay. So those were the provision what we have discussed. I will upload these MCQ sheet, so you can try the other MCQs also. And they are very simple MCQs. I will upload the sheet with answers only. So you would be able to do more practice regarding this chapter. And let me tell you, it's a huge chapter. A lot of need to be covered. And I've tried that as much as important things. If possible, we can cover in this topic. If there's any query, kindly ask me. Huge chapters हैं. You have to find out the important provision from those chapters. There are certain question also which has been asked in examination. Okay, let not discuss that. Let me show you that questions. They are not that difficult. They are very simple. You are able to solve easily. Like this is May 2024 question. Okay. Page number 8. You will see how easy these questions are. So might be the provisions looks like very difficult, but the questions that is going to be asked in examination would not be that difficult in my opinion. So that was question number 2B. Examine the applicability of tax deduction at source or tax collection at source. Okay, read it. I'm going to read it for you and let's see, are you able to give me the solution of these questions? So for assessment year 24-25 in the following independent situation. The question says, ABC Limited paid rent of 75,000 plus 18% GST. Question not visible, just a second. Okay, yes. Okay. So this is the question we need to solve. This is the examination question of 4 marks. Examine the applicability of tax deduction at source or tax collection at source as per the Income Tax Act 1961 for the assessment year 24-25. Okay. So ABC Limited paid rent of 75,000 plus 18% GST per month to Mr. Ram for the office premises from 1st April 23 to 31st March 24. Mr. Ram has furnished his pen and also filed his return of income before due date regularly. So you need to tell me whether TDS need to be deducted and if yes, on which value. And always remember what question is asking. They're just asking the applicability. They are not even asking you the amount to calculate the TDS amount. So you just need to tell the examiner that whether it's going to be applicable or not on the basis of information. You have to write them a limit, but you need not to calculate the TDS amount. Do not calculate the TDS amount in this question. So is it satisfying section 194I provision? Yes, the person is ABC Limited payer. So it's not individual HUF. Payment is 75,000 per month. So technically for the whole year, it would be 9 lakh rupees, I guess. So it exceeds the limit of 2,40,000. Clear? GST part, of course, excluded. No TDS can be deducted on the tax part, whether it's GST, service tax, or custom duty, etc. Right? So PAN submitted, so there would not be higher rate of TDS is not going to be charged. So in this case, it's very simple. 10% of this 75,000 need to be charged as the TDS for every month. And you will be able to see that even in the suggested solution, Institute does not calculate the amount of TDS. You can see how easy solution. ABC Limited is required to pay a tax on rent of 75,000 because aggregate is 9 lakh exceeding 2,40,000, 2,40,000. So payment time of credit, whichever is early. They did not even calculate the TDS amount. You just need to write it down this much because they are just asking the applicability, not the amount of TDS. So this is for 2 marks and you can see how easy that was. And we are not solving MTP RTP question. We are solving May 2024 question paper. Now second question. XYZ Private Limited sells 2 cars to Mrs. Anju costing 4 lakh and 12 lakh respectively on 1st May and 25th December. Mrs. Anju has furnished her PAN and filed her return of income regularly before due date. So now what will happen? Is there any car provision regarding TDS or TCS? TCS is applicable. If the motor vehicle value exceeding 10 lakh, then TCS would be applicable. So 2 cars has been sold. This would be outside the purview of TCS, but because this is exceeding 10 lakh rupees, so TCS would be applicable on this value. That is 1% of 12 lakh. So just need to write down the rate and the applicability. Here is the solution you can see. On 4 lakh, not applicable. It's required to collect TCS on 206C1F at 1% of the consideration of 12 lakh. Since value of this car exceed rupees 10 lakh. Tax need to be collected at the time of receipt of 12 lakh rupees. So it is solved. Clear? If you do not remember the section, kindly do not quote wrong section. If you remember the correct section 206C1F, then only write it down. Otherwise, you can only write it down that TCS will be applicable at the rate of 1% as per the provision of TCS. Okay. Do not quote wrong section. It would be very dangerous for you. So these kind of question in the examination is going to be asked. And as I told you, always remember the applicability, the rate, the threshold limit, the pair. That would be enough to solve normal question. And the important part in those TDS provision I have discussed with you. That is also, please remember or learn those provisions also. Abhishek is asking, only 206C is enough to quote? Yes, you can also write 206C only. But if you are going to write the bracket part, so that would be always absolutely correct. You cannot write 206C and bracket 1. It could not be like 1. It would be completely either 1F, or you can ignore the bracket. You can only write 206C. That would also sufficient. Okay. Any more query? Okay, Sejal is asking, sir, in case of winning from online game, the TDS percentage is 30%. We are not going to add the education cess, etc. That is not allowed. Okay. Same question. Okay. Clear, Sejal? So only in case of salary income we include education cess, etc. for calculation of TDS per month value. For other case, there is no requirement of adding any cess in any case. Okay. So I guess there is no more query. So can we close the session, Mr. Bhargav? Welcome, Mr. Om Krishnan. Welcome, Abhishek. Happy Children's Day to all of you. Enjoy. Mr. Bhargav, can we close this session now?